In previous videos, I talked about emergency fund. What is an emergency fund? It's money you set aside for emergencies, and the money that you don't need, you can't even really invest in the stock market because the stock market really is money you don't need for 5 years or longer because of the volatility, the ups and downs of the stock market. So emergency fund, when you're working, there's generally people say have a set aside 3 to 6 months worth of money to fund emergency. But whilst you're in retirement, early retirement, it's good to have more than that as a safety buffer so that you don't have to dip into your stock market investment should the market dip into a bear market position. For me personally, I have 2 to 4 years worth of near cash that I can access easily. And one of the places I put that is into a premium bond account, which is a government-backed bond. Money's given to the government to invest and is secure. And the winnings is tax-free. So it's sort of an efficient way of, tax-efficient way of putting money aside for your emergency. So yeah, I've made an experiment this year to work out exactly whether it was more cost-effective to invest into as premium bonds or into a high-interest account. This year, on average, high-interest accounts were offering 4%. So I would win going the premium bond route if I get higher than that on a like-for-like basis. This video goes into more details with real numbers for myself and for my husband. The results will surprise you. This video is all about premium bonds versus high interest account. So got my emergency fund. So this year I did a mini experiment to see which one would give me a higher return. Premium bonds or high interest account for my emergency fund. So because it's an emergency fund, I need easy access to it. It's money I can't really put into the stock market, which potentially could give me higher returns, but I do that for 5 years or higher. So the emergency fund, premium bonds. Premium bonds are a bond, money lent to the UK government. So it's 100% secure. The winnings are tax-free, but there's no guarantee you'll get any winnings. You buy these tickets, they're called premium bonds, and they've been put into a national draw on a monthly basis. You get a chance to win between £25 nothing. If you do win, it's £25 to £1 million. But some months, if your ticket's not drawn, you win nothing. That's the disadvantage of premium bonds. I decided to do this experiment in 2025, and here are the results. To give you a background, we've put in 50k, which is the maximum you can put into a fixed premium bond. And for me, my returns were, I should look at them now in a minute. So I got £2,175 for this year, which annualised is 4.35 net. And because you don't pay any tax on it, I would need to find the equivalent of 5.4375 for it to be equivalent to a normal high interest savings account. My husband also put in the maximum, which is 50,000. His winnings got him 1,675, and that was 3.35, and gross up is 4.19. In total, for this year, I got higher than currently in 2025. The interest rate on a high interest account was around 4%. And I got the 5% plus, and my husband got 4%. So this year, it seems like putting our emergency fund into premium bonds has worked out quite well. And of course, there was a chance to win £1 million. I refer to the premium bonds as my Del Boy savings account because in a UK program called Only Fools and Horses, he was always trying to win £1 million. But there is a risk with premium bonds that your numbers may not come up and you could end up with nothing. For example, in December, I had no winnings at all. but overall, I had a gross return of over 5%. Do you have premium bonds? Have you had any winnings? Thanks for listening.